Welcome back to Alberta Primetime and the nightly Vocal Point now. Joining our Monday Money panel, Russell Dradwa, investment advisor with Canaccord Wealth Management. In Calgary this evening, Shafik Hirani, Director, Senior Executive Financial Advisor with Investors Group Calgary. And of course, Beth Hamilton-Keene is back, Director and Portfolio Manager. More investment management also in Calgary. I don't often get to sit on this Monday Money panel. It's a real pleasure to see all three of you.
We look forward to it.
We were just speaking with Murray Smith, Dwayne Brad a moment ago about Keystone XL Pipeline. Of course, it's on hold for the time being. New routes being talked through that contentious area in Nebraska. Premier Redford is down in the States. She's taking on that momentum of protesters and their talk of Alberta oil and keeping it out of the States. Russell, Keystone XL, is this rattling nerves in the financial sector?
I wish I could have listened in on that, but there's some pretty sharp people running the oil industry. And with the difference in price between West Texas crude at about $98 and the global market paying $115 for oil, they'll figure out a way to get it to market. The only time they're going to start sweating is if oil comes around $30, $40, $50 a barrel. At these prices, they just got to figure out how to get it to market most effectively. And certainly this is a big hiccup.
Shafik, a potential impact on Alberta economy? It's a $7 billion pipeline that's up in the air right now. Obviously not all of that money will be spent in Alberta, but some of it will. Economic impact, your perspective?
Yeah, there's a lot of economic impacts, and I think what people aren't really looking at, and I know the decision's been delayed. I don't expect a change in the stance on the political side, so it looks like there will be a delay. But there's some really positive news today. The economic impacts, if you look at my perspective, would be it's going to impact a lot of Alberta in terms of real estate prices, economic growth, tax revenues, not to mention the fact of oil and other pipelines that are in play, like the Mackenzie pipeline has been under the scope for 3 years. It's interesting to see what's going to happen with that. Enbridge's Gateway pipeline. So there are significant economic impacts right across the province.
Beth, does this throw up a huge red flag over investment?
Not so much over investment. You certainly want to be cautious about your investment in commodities in general, particularly in this climate. I mean, I would go back to the more macro picture, and that is, what is the prolonged outlook for energy prices in general? And really, we are seeing a margin squeeze and potential labor cost increase. And of course, all of these other issues with the XL pipeline would contribute to that. So those are types of things that we want to look at from an investment perspective. What does this mean for the earnings of each of the corporations that may be affected? What does this mean for the underlying value, if any, of the commodity? And on a global scale, it's really more about getting a product to market than it is about setting the price.
Russell, if it is about getting a product to market, there is also that talk of that Northern Gateway pipeline through BC out to the West Coast to get access to an Asian market. From the business community perspective, is that where the focus should be shifted? And forget about Keystone XL. Let's talk about Northern Gateway.
Well, I think Prime Minister Harper's comment today at the, the Asian Pacific Economic Cooperation meeting was, we're going to look at Asia a lot stronger. And I think they haven't shown that card soon enough and enough times to make the Americans realize that there is other markets for our product. And I think that's the way absolutely to go.
Shafik, will the Americans sit up and take notice if the Prime Minister is talking about getting oil to Asia instead of the U.S.?
Well, Harper and Alison Redmond, they're not, making any threats or anything like that. All they're saying is a fact. The fact is that there's a significant demand for oil from Asia, and not only that, but a lot of Eastern Canada does not take oil from Alberta. Eastern Canada imports its oil, so there's a significant, there's other buyers. And so, yeah, I think they better take up a notice, because the U.S., they consume 14 million barrels a day, and 10 million is imported. This Keystone pipeline is 1 million per day, so I think it's a big hit for them.
Beth?
Well, certainly, again, I continue just to reflect on what this is going to mean kind of for the long term. Obviously, out of Nebraska today, some promising news that they were going to work with TransCanada to try and find an alternative route, one that avoided the Sandhills area, an environmentally sensitive area. Bigger picture as well, I would be cautious about what this means for our brand, for the Alberta brand, for Canadian oil and gas brand. And certainly those are things that will need to be managed, as much as we may kind of scorn at it and disdain and say, what we've got is good. We do need to continue to watch and manage that management.
All right, let's talk about one more quick item before we head to break. It's numbers of another sort. Latest edition, Alberta Venture Magazine, proposing the notion of transforming Alberta by population. In fact, aiming for about 10 million. Russell, what do you think? We're at 3 3/4 now.
Well,
3 million, almost 4 million people. That's a huge.
When I saw that topic, I thought that is huge. But when you look at it, let's put it in perspective. China has 140 people per square kilometer. U.S. has about 32 people per square kilometer. Canada has 3. Alberta has a little over 5. So we can certainly accommodate it. It's the infrastructure. And when you get into political mess, as we've seen what's happening with down south, the infrastructure is critical. And I'm always told by my guys in Fort McMurray, it's controlled chaos up there. But it's like putty going through the fingers. It's just barely hanging on. So we're looking at doubling the oil sands production in the next, I think, by 10 years from now. So what's that going to do for the infrastructure? So we can accommodate it. It's the infrastructure, it's the planning, it's the people. It's critical.
Shafik, it would give us in Alberta a whole lot of political sway if we were to grow to 10 million people. That put us on par with Ontario.
It would if Ontario doesn't grow in the same pace. You know, it's really not that stretch the realm of our imagination. Alberta's right now at around 3.8 million. The report was projecting by 2050. So if you just do some rough math, to be 3.75 million to go to 10 million by 2050 in 39 years is a 2.5% average growth rate. So 2.5%, Alberta has been growing at 2% for the last historically, so it's not that big a stretch. The only thing is where we're going to get that extra 7 million, and it's going to not just come from births. It's not going to come from pinching people from down east. It's going to have to come from importing people internationally. So that's the growth. That's the framework that Russ was referring to.
Yeah, based on the current number of women we have in the province, that would mean 5 children per woman here. So I'm not sure that we as Albertans are going to make that kind of commitment to that kind of growth. But the exercise itself is very useful, and I think all corporations do this, most individuals should do this, is envision yourself out and envision the province out, in this case, that many years, and think about what needs to be done, what kinds of investments need to be put into place, what kind of policy needs to be there to support and encourage that growth. But really, also, it's got to be managed. So you've got to make sure that you've taken care of some of the risks that may be affecting policy decision-making going forward as well.
That's some serious long-term planning. After the break, all eyes on Europe, what the Monday Money Panel is watching out for. Stay with us. Welcome back to the nightly Vocal Point and our Monday Money Panel. At this time each week, we take a look at what is on our radar of the experts. We'll start in Calgary this time. Shafik, I'm assuming it's Europe. Is that, in fact, what you're looking at?
Yeah, there's been 2 major soap operas I've been watching over the last 3 months, and Europe is one of them, the Keystone's the other. So I'm really interested to see what's going to happen with Italy's bond yields and the Greece new parliament. What else is on my radar is also Canada, and a lot of our focus, at least in our practice, has been towards the Canadian economy. And if you look at Canada next week, inflation numbers are coming out on Friday, and manufacturing numbers are coming out on tomorrow. So the economic news for Canada are impactful because Canada is trying to target a 2% inflation, and if GDP numbers are negative, then this will be the final quarter. The second quarter in a row of a negative GDP, which means that we could slip into a small recession. So that's what's on my plate.
All right. How about yourself, Beth?
Well, certainly Europe has been on my mind. In fact, I was at a European investment conference earlier in the month, and it was useful in providing some internal insight. Obviously, the outlook is still very muted. Real concerns about where the growth is going to be coming from. But it's augmented by the fact that there is deleveraging going on, and not just in North America, as we've been hearing about, but certainly in Europe. There's certainly that sense of you've got to kind of pay down what you've got and really rationalize things. So the deleveraging will have an impact and really will mute the growth into a more anemic pace. Whether we slip back into a worldwide recession or not really becomes a moot point. It'll feel the same whether it's a slight growth or a slight recession from that perspective. What we're more worried about is if it's a deep, dark recession. And of course, all eyes turn to China still for that. On the domestic front, or on the more local front, I would say that we're watching for that U.S. political gridlock as it relates to debt ceilings again. If you recall that in early August, we're going to be broached with that same market gyration, I believe, as we head towards the latter part of this month. So that'll certainly have an impact on market volatility in the near term.
So a balance between Europe and North America from Shafik and Beth. How about yourself, Russell? I believe you were talking the other week about the lows of the low. In Europe, it's scary times.
Well, the markets aren't trading on fundamentals right now. They're simply trading on headlines. I mean, we have the Greek T-bill auction tomorrow. We have Portuguese the next day. We have Spanish and French the next day. If they don't go well, you watch what happens to the markets each of those days. But fundamentally, the markets, earnings season is just ending, and 61% had solid earnings. Companies are seeing an unbelievable amount of cash. I love quoting Warren Buffett. He goes, when the tide goes out, you see who's been swimming naked. And if people aren't dissecting their portfolios to see the good companies from the bad, we'll certainly see it with European countries.
So does that mean some money will flow back into the market?
I would hope people are putting their toe back in the water. There's certainly some great opportunity, but if you have a short-term need for the money, I don't know why somebody would invest in the next, with a parameter of 3 to 6 months. This is not going to get cleaned up.
Beth, I cut you off there.
Well, you bring up a great point. I mean, we do really need to start to step back and really differentiate between the sovereign risk and the sovereign debt issues out of Europe and now potentially again in the United States, and the banking situation. Certainly the bank balance sheets and the banking spreadsheets, particularly in the UK and in international stance, are one thing. But on the corporate front, kind of other everyday corporations, there is still reasonable profitability and certainly great value to be had. But you definitely need to be investing for the long term. So when we're talking long term, it's a 5 to 10 year horizon. However, it's very compelling right now because when you look at bond yields at around 2% and compare that to dividend yields on good blue chip organizations around the world closer to 3%, you begin to see that shift, that temptation to get back into the markets.
Shafik?
Yeah, the only thing I would add on to Beth's point is that not only are you looking long term, but if I were to encourage just Albertans in general, I think you can't build a puzzle without a picture of the box, and I think the importance is that people sit down and reflect on their plans. I mean, you can get advice from anybody, with your BlackBerry nowadays, even Warren Buffett with your BlackBerry. You can trade, pulling your credit card out and open an E-Trade account for $6.99 a trade. And so I think if everybody's ending up sort of tough, the key is people don't need advice, they need a plan.
Corporations.
Let's differentiate between trading and investing, please.
Well, let's talk about corporations, though, Russell. On the panel with Jennifer, you guys have talked in recent weeks about corporations getting off their corporate wallets. Is now the time for corporations to be spending?
Well, the key is for them is if you think you're going to lose your job in the next 6 to 12 months, are you going to spend? So they're looking at the forecast for the future.
But if they have the money, if they have the stockpile of cash?
That's the catch-22. That's the catch-22. They need the confidence. It's just a matter of confidence right now in the political bodies. Do you have confidence in the political bodies running this show? I mean,
Mike, I don't think you're going to get a lot of corporations spending really quickly because, and Russ, I'm sorry I interrupted you.
Just fine.
The one thing is that we're coming near December 31st year end, and a lot of corporations are going to be doing their annual year end filing, and they're going to want to go into the balances with a little bit of a healthy cash reserve. I think cash is king, and I don't see them spending before the new year.
Beth, does that make things scary before Christmas?
Well, I think that's kind of a longer-term trend. We talked about deleveraging, and this is exactly what that is. That means corporations may be acquiring capital on their balance sheets and may be reluctant about investing, and certainly they're reluctant to borrow at these very attractive rates. So you're not seeing that same investment. Now, that being said, it's all about finding those companies that are making the good investments. If those companies aren't finding good ones and can't find a way to deploy that capital, I sense that they'll be returning some of that cash to shareholders, whether it's through a dividend or other ways through share buybacks. So those are some opportunities for investors that they may be able to participate in.
Agreed.
This is why I watch the Monday Money panel, because I learn something from you folks every time. Thank you kindly. Russell Dradwa, Investment Advisor with Canaccord Wealth Management. Shafik Hirani, Director and Senior Executive Financial Advisor with Investors Group Calgary. And Beth Hamilton-Keene, Director and Portfolio Manager, Moore Investment Management in Calgary.